The real reason behind Apple's price hikes has nothing to do with you. While Tim Cook's company boasts record-breaking earnings, a quiet revolution is unfolding in its operational costs. Consumers are now footing the bill for a technological arms race nobody explicitly signed up for. We're talking about substantial price jumps on devices you rely on daily. But where is this surge in spending truly originating, and why is it being passed directly onto your bottom line? Apple's Q2 2026 earnings show robust financial health, with revenues up 18% year-over-year. Meanwhile, the 16-inch MacBook Pro price rose $300. The 11-inch iPad Air jumped from $599 to $749. Even the HomePod Mini got a $30 bump. This contrast between record profits and higher prices raises a question. How can a firm be so profitable while asking customers to pay more? The primary driver behind these price increases, as confirmed by Apple's leadership, is the insatiable demand for artificial intelligence infrastructure. Apple's AI-related capital expenditures surged by a dramatic 40% year-over-year. This massive influx of investment isn't just about software, it's about the foundational hardware, the cutting-edge processors, the vast server farms, and crucially, the memory components that power these advanced systems. This AI-driven capital expenditure has sent shockwaves through the RAM market. Manufacturers are reallocating production lines to meet the demand for high-bandwidth memory required by AI accelerators. This has led to a global shortage and a significant spike in RAM prices, a phenomenon now dubbed a Armageddon. The ripple effect is undeniable, impacting everything from high-end PCs to gaming consoles, and now, directly influencing the cost of Apple's premium devices. Tim Cook calls the price increases unavoidable. He also labels the pricing strategy unsustainable for the long run. He directly attributes the hikes to the AI industry's rising costs. This is not a simple adjustment. It's a strategic decision to absorb the AI race's huge financial burden. The decision passes the cost directly onto the end user. The question is whether this model is sustainable for consumer electronics. The Consumer Price Index for electronics rose 6% in the past year. This rise is alarming next to wage stagnation for many consumers. The growing gap makes essential tech less accessible, forcing tough choices. It may also stifle innovation adoption among broader demographics. For investors, this strategy means continued growth and shareholder value. Apple stays profitable despite rising operational costs, showing its market dominance. But this success costs consumers, who now subsidize tech advances that help shareholders. Is this the future of tech pricing? In that future, innovation would be funded by higher consumer burden. Analysis shows about 30% of Apple's recent earnings boost comes from these price hikes. This means a big part of the perceived success isn't just from higher sales, or from product innovation. It stems from a deliberate pricing strategy to offset AI costs. The numbers don't lie, they reveal a clear financial strategy. The effects go well beyond the MacBook Pro. Similar pricing strategies appear across the tech industry. Gaming consoles face price hikes from component shortages. Other major tech firms are investing heavily in AI infrastructure. Consumers are becoming the silent financiers of the next tech wave. This happens whether they are ready or not. Sustainability is a big concern. If consumers keep seeing price rises that beat wage growth, market saturation will happen. Buyer resistance will also happen. This could lower demand, making firms rethink their strategies. The current model builds record earnings on rising consumer costs. It may work short-term but could harm the industry long-term. Signs of consumer pushback are already appearing. Reports of cancelled product launches and price hikes on popular devices are sparking debate. As essential tech costs rise, many consumers are priced out of the market. This growing resistance could force a fundamental shift in how tech firms innovate. It could also change how they price products. The result could be a fairer split of costs and benefits. Apple's earnings report shows strong financial performance, but it also reveals a stark truth: the AI revolution isn't free. Consumers absorb the costs through higher prices. This trend continues with no immediate sign of slowing. Understanding this dynamic is key to navigating tech's future and personal finance. Remember what we said at the start about the real reason behind Apple's price hikes having nothing to do with you. Now you see exactly why the AI arms race is being funded by your wallet. What are your thoughts on these AI-driven price increases? Are you willing to pay more for cutting-edge technology, or is it time for companies to find other solutions? Let us know in the comments below. If you found this analysis insightful, please like this video and subscribe to Thinking West Plus Forgotten Roots for more in-depth breakdowns of finance, technology, and global trends. We're diving into the hidden costs of quantum computing next week. You won't want to miss it.